I was like, okay, I am going buck wild with the tax shelters. You could even be getting potentially a bigger return. We got like a $5,000 tax refund, had a negative 2.62% tax rate. It's basically a big interest-free loan to the government, and you have to prove to them that they have to pay you back. Not making smart decisions or understanding the tax code can cost you way more money than it otherwise would. My wife and I, we took a ton of time off with our kid. And then my wife also dropped per diem after that. And all of a sudden now my return will go from like I owe $2,000 to now I'll be getting like a $3,000 tax refund. Would say, no. You go back, work through those, and you find more write-offs. We're not paying that much. It's not as hard as it seems.
Welcome to the Enriched Nurse with your host, Dan Richmond. Enrich your personal finances, nursing career, and life.
It is that time of year when the tax forms start rolling in, and I am always surprised how many nurses seem to pay someone else to do their taxes for them. I've done my own taxes for the last 20 plus years. I have never paid an advisor, and I have been using tax software to complete my returns since at least 2006, and that's when I first started working as an RN. I started getting really smart with my income and my taxes after my wife and I's earnings peaked at around $150,000 way back in 2013. And that year we owed thousands more at tax time. We were not getting a tax return. We were told we'd have to start making quarterly estimated payments, and we had to pay thousands of dollars. That year we paid almost $50,000 between federal, Social Security, Medicare, property, and our state taxes. I was just like, man, there has got to be a better way. It's crazy how much we're having to pay. And it turned out I found quite a few ways. So today I'm going to break down 5 myths about your taxes and your tax return. 1, you need to pay for professional help. 2, getting a big return is the way to go. 3, you can get bumped up a tax bracket. 4, you don't have to itemize anything anymore. 5, nothing in life is certain but death and taxes. So before we start breaking down the myths, a couple notable changes for this year, for 2026, due to recent tax law changes. Nurses may not have to pay taxes on their overtime. I haven't filed mine for this year, but there is supposed to be no federal tax on overtime. And so that means if you make $80 an hour and you pick up time and a half and you're making $120, that means you won't have to pay income taxes on part of the time and a half. That $40, that half that takes you up to that $120. So be aware of that and make sure you take advantage of it, especially if you worked a ton of overtime. And keep in mind, you'll still pay taxes on the hours you work, but the half portion, my impression is you won't have to pay overtime on that. If you were a nurse who is somehow found a job where you're getting tips, supposedly you're not going to have to pay taxes on tips either. So that's kind of interesting. So 2 unique changes for 2026 to be aware of. And also, if you have kids or you had a kid in 2025 or are expecting in 2026, you could get potentially $1,000 into what's called a Trump account, which is a tax advantage savings account for your child. And the government will put $1,000 in it. Kind of a weird way to get this account set up. They're not available currently to be set up online, but when you're filing your tax return, apparently you check a box on form 4547. I've had a hard time really getting a lot of good information about this, but this is what I've been able to confirm. Then you can also potentially contribute in the future and save on taxes. Because of a large multi-billion-dollar donation from the Dell family, 25 million kids born before 2025 and who are age 10 or under can potentially get $250 in seed money or an initial contribution. And that is supposed to be based on median income of, I believe, $150,000 or less in your zip code. So if you had kids previously and you're not having any more in 2025, 2026, you still could get a little bit of seed money for them in one of these accounts. So definitely look into that. Okay, so let's break down myth number 1. You need to pay for professional help. I really don't think so. And now, while I am definitely not offering you professional tax advice here, and this is an educational episode, I don't think people necessarily need to go pay somebody to do their taxes for them. And I think there might be some assumptions being made when you are hiring somebody to do your taxes for you. There's quite a few ways to get your taxes done for free using online software, or just get them done cheaply using, paid software option. But I've even seen tax help offered at the library for free workshops or free ways to file your taxes. And way back in the day, I do remember filing simple income tax returns on paper. And, it wasn't that bad. And basically, the simpler your taxes are, you definitely don't need to pay for professional help. But what's funny about that is, even when you think your taxes are complicated, I thought my taxes were getting really complicated in, 2012, 2013. Around then, I was building a house. I was going to be itemizing for the first time, and I had stock investments that had some funny stuff, like a company had gone bankrupt, trying to figure out how to take a loss and some things. So I actually went to a tax advisor for a consultation to ask them about doing my taxes. And I just mentioned, oh yeah, my taxes are going to be a lot more complicated now, so I think I'm going to need some help. And they actually gave me really good advice. They said, it's actually really simple. It'll be a really straightforward return. And so then, of course, I immediately thought, well, then I guess I'll just keep doing it myself then. There's really no good reason to, pay you a few $100s to do it for me then. But, I think there's quite a few good reasons why you should consider doing your own taxes. 1, it's easy with software. But 2, so you can find write-offs. I mean, nothing motivates me more than seeing that I'm going to owe a tax bill and figuring out how to get my taxes due down. I don't like owing taxes come tax time, and I almost treat it like a game, and it has kind of turned into a game for me, where each year I am trying to see how low I can get my tax rate, and I've even got it negative some years, which I'll talk about here a little bit later when we get to the myth about the tax brackets. But it creates a pretty big incentive for me to find write-offs to reduce my taxes. I had these friends, they had their own business, and then he would do the taxes, and then his wife would say, no, you go back, work through those, and you find more write-offs. Like, we're not paying that much. And he would. It would cause him to go work harder and make some smarter decisions and take advantage of tax shelters and whatnot. So I think by doing your own taxes, not only can you find write-offs, discover tax shelters, but you can also understand the true costs. When you see how much it's actually costing you in taxes, I think it can motivate you to do something about them and make changes that's better for you, and ultimately to, optimize and pay less in taxes overall, which is a great thing. But I think when you're paying someone else, I think there's an assumption that they're like busting their chops, like working really hard, finding you every tax break. But I think for a lot of people, what might be going on is they're already paying way too much in taxes every paycheck and throughout the year anyways. So then, like, this person inputs all their information, and then it shows they're going to get a tax refund. And then they probably don't do a whole lot. I mean, maybe they do a couple easy things or give a couple tips. I don't know, because I've never paid somebody to do my taxes for me or give me advice. If you're going to get a big tax refund, right, like, you're probably going to be happy, and they're probably not going to really try very hard to lower your taxes, because they're just like, oh, sweet, they're going to get a few $1,000. They'll be happy. I'm happy. I just got, $200-300 and didn't have to do much. And it's kind of funny. I was listening to this podcast, and the founder of Teachable, he sold the platform Teachable years ago for hundreds of millions of dollars. And this isn't just true of nurses or individuals, but this is true of business owners and bigger companies. And he was talking about how by not optimizing your taxes, especially at a business level, or when you're talking about really big amounts of money, not making smart decisions or understanding the tax code can cost you way more money than it otherwise would. And just having an accountant doesn't necessarily mean that they're going to give you good advice or go to bat for you to save as much money. I mean, and they were talking about that, how a lot of accountants are probably running a volume-based system where basically they're trying to file as many tax returns and charging a fee. And I think that would be pretty accurate. I started doing taxes for a family member in addition to my own. And I was kind of surprised they were paying an accountant $250. And the accountant was a CPA firm. And they basically had this big packet, and it was like, here's the things I need you to gather. So it was like a 40-question thing. I had a list of all the documents and paperwork they were going to gather. And I mean, I was just flipping through this thing, and I'm like, gee whiz, by the time you filled all this out, you've pretty much already done your taxes. So like, why would you pay somebody a few $100 to basically put it into an automated system or software and spit out your tax return and file it for you when you could just do that yourself, right? But the other thing is when you do it yourself, I think it provides an incentive to be smarter and do a better job with your taxes. And so what I found is, it took me like less than an hour. Like this family member's taxes were very simple. They were still struggling to find all this stuff. It still took them a fair amount of time to gather it. It's pretty easy for me to just input it in, and and then they don't have to go pay somebody like $250, $300 to file their tax return for them and not really optimize. And because I'm doing it for them, we are talking about ways that we can optimize and looked in the future and made some changes. So that's a good thing. So some questions to ask if you do get your taxes prepared by somebody or filed. Is your tax preparer actually saving you money, or are they just basically inputting all the data that you provide them and the questions that you answer for them? And then do you just get a big tax return, or are they actually, earning their fee? Like, are they giving you good advice? Are they asking you for more information or spending time? I mean, how much time and advice are they giving you? So if they're not spending a whole lot of time and they're asking you, hey, get us all this information, we'll put it in. They're just like, hey, congratulations, you got a tax refund. And that's that. I mean, you probably should be doing it yourself, don't you think? I mean, the average amount of returns preparers, accountants process, I mean, if their business model is basically filing a ton of taxes on people's behalf for, flat fee, then they basically are probably trying to get those things inputted as quickly as possible and filed as quickly as possible. And if I were running that kind of a business model, the only people that I would probably be spending a little more time with are the ones who aren't automatically getting a big tax return. Because they're probably going to be kind of annoyed, right? So then on that particular one, I might spend a little more time. But, are they just doing data entry, or are they doing thoughtful analysis? So I think that's a pretty big myth, that you need to pay for professional help as a nurse, or you need tax advice. I think you might be surprised how easy it can be to just do it yourself. I've got a business, and it's still pretty easy for me to just do my taxes myself. Myth number 2. Loving the big tax return. I know so many people, so many nurses over the years have told me how much they love getting a big tax return. And don't get me wrong, I love getting a big tax return over having to pay a big tax bill. Don't get me wrong. But the idea that getting a big tax return is a really good thing kind of depends. If you're getting a big return because you've spent a bunch of time thoughtfully figuring out how to pay less taxes and avoid taxes, then that's a good thing. But if you're getting a big return because you literally have overpaid in taxes every single paycheck, every 2 weeks, all year long, and you've provided an interest-free loan to Uncle Sam, and it's literally the worst loan imaginable. Like, not only are you loaning them the money interest-free and they're taking it automatically from your paycheck, you have to actually prove to them that they have to pay you back for that loan. Nobody would accept a loan term like that. But with the big tax return, that's pretty much what people are doing, and they actually really like it. Don't get me wrong. I get it. It sucks to owe a big tax return potentially, but I think a lot of people could be getting a lot more of their paycheck sooner if they better understood their taxes and were doing their returns themselves. And trying to avoid getting a big tax return and rather being close to breaking even. And that's usually my goal. My goal is to break even, and then I earn my big return. And I'll talk a little bit more about how I earn my return by reducing my taxable income even more during tax season, looking for tax breaks and whatnot. And if you are getting a big tax return, like I said, it's basically a big interest-free loan to the government, and you have to prove to them that they have to pay you back. And there's a good chance, depending on how you're filing your taxes, that they might not even be paying back as much as they should be. Like, you could even be getting potentially a bigger return. So I tend to think it's a better idea to try to break even. So updating your tax withholding using a tax calculator can help you update your withholding and make it more correct. So that way you can go for a smaller return that you can still potentially make bigger when you're filing your return and looking for ways to reduce your taxes even further so you can get even more back. So yeah, the myth of the big return, not necessarily a great deal. You could actually automate an amount of savings. Like, take your last year's return. Like, let's say your big tax return last year was $6,000. Well, you could just automate $500 to like a separate savings account and then break even on your tax return. You'd still have $6,000, and instead of having to wait until like February, March, or April to have that money. So you'd get it each paycheck. The other benefit of that is you could now, instead of giving the government an interest-free loan, you could have that in an interest-bearing high-yield like savings account and actually have it grow and earn even more money. So yeah, if you're getting the big tax return, consider why you're getting that and see if maybe you should update your withholding and try to more break even. So myth number 3, I'm always surprised how people don't seem to understand how the tax brackets work. And you probably heard this thing where a nurse is like, oh, I got bumped up a tax bracket, now I'm having to pay way more. So the way the tax brackets work is all of your income's not subject to a tax bracket, like once you bump up. You have a range of income that's subject to each bracket. So you have a certain amount of money that's subject to 0% federal tax. Then you have like the next bracket, which I think is like 10%. And then the income between, like 20,000, these are going to be estimates here. So then maybe like the income of, $20,000 to 30 something thousand dollars. That portion of the income will be taxed at 10%. And then once you make more than like 30 something, then you might bump up to a 12% tax bracket. And now that income between like 30 something thousand and like 50 something thousand, that's going to be taxed at 12%. And then once you earn more than $50,000, that income from $50,000 and beyond is going to be subject to like 22%. And then you hit the next bracket. So not all of your income automatically becomes subject to the next highest tax bracket. And so what a lot of people don't seem to understand is you actually have an effective tax rate, which is your real tax rate. And that is the average of all your tax rates. So even if you're in like a 22 or 24% tax bracket, your effective tax rate is still probably quite a bit less. It's probably, more like 14 to 18%. When I was not very tax smart, even though I was getting up into the 24% tax bracket with some of my income, my effective tax rate was still about 15%. So sometimes it feels like we're in way higher tax brackets. I live in Oregon, and in Oregon, I'm having federal taxes taken out. I'm having state taxes taken out. Medicare and Social Security is another like 7.65%. There's some local taxes unique to Oregon as well, some other payroll taxes. So by the time everybody's taken their cut, it can certainly feel like, especially once your deductions have been taken out for your employer benefits and whatnot too, it can definitely feel like a lot of your taxes have been taken out. But keep in mind, just because you get up to another tax bracket doesn't mean that all of your income is going to be taxed at that. Now, I do like to lower my taxable income, and I like to try to get as little of my income taxed at those higher rates as I can. And one of my favorite ways to do this is I like to lower my taxable income by using tax shelters like 401ks, which every paycheck reduces my income, so the amount subject to tax, and then also using an IRA deduction, an individual retirement account. And the cool thing about the IRA deduction or the IRA contribution is you can actually make that up until April 15th of the current year for the previous year. So if I don't like what I see on my returns, one of the main things I know I'm going to do is I'm going to put anywhere from like a few $1,000s up to like $14,000 into my IRA for the previous year. And that can save me 20-30% right there off that contribution. All of a sudden now my return will go from like I owe $2,000 to now I'll be getting like a $3,000 tax refund, which is awesome. And some years I'll max them out. For 2026, the IRA contribution for people under 50 is $7,000 individually or $14,000 up to couples. So it can be significant. It can potentially lower your tax rates quite a bit. And for me, it's often going to save me 20-30%, because even at that income that's in the 12% bracket, when I combine that with my state taxes, that's over 20%. And if I'm in that 22% tax bracket, it's over 30% when combined with my Oregon income taxes. So I can save quite a bit of money by doing that. Now, if you're thinking, well, where the heck can you get that kind of money to just invest like thousands of dollars to lower your tax bill? Well, for one, you could actually use your tax return. So you can file the tax return and then make the contribution by April 15th. So, and you could use that tax return money for part of that. But also you can optimize your money. You can get smart with your money. And that's really what I ultimately did. And within my ANCC accredited nursing education, and thanks to the Enriched Nurse, you can now get paid by your employer to get smart with your money. So we actually offer several ways that nurses can use our on-demand online practical education to learn how to boost their income, make smarter financial decisions, increase their wealth, and increase their financial well-being. And you can do it while you're getting paid by your employer and reimbursed for the cost of the courses by potentially using your employer education funds that, a ton of nurses don't use. So the financial literacy and know-how that I share in our ANCC courses and programs is so effective, I've been able to work part-time, invest heavily, and pay way less in taxes while raising kids, really with no loss of quality of life. Now, what? That's when I'm talking about those effective tax rates. And I have had for the last decade or so really low effective tax rates. I'll list those here in just a minute. And my income has kind of been like the Curious Case of Benjamin Button. I don't know if you remember that movie, but he starts out, he's like a really old man, and then he gets younger and younger, and eventually he dies as a baby. Like, kind of the same thing has happened with my income. It's gone kind of backwards. My household income peaked in 2013. My wife and I didn't make anywhere near like 150 something thousand for years, even after we had kids. So for years, my income typically would go down, and I'd actually intentionally try to get my taxable income down even more, which allowed us to pay way less in taxes and put away a ton of money in investments. So, if you want to learn more about how you can do that, our ANCC courses will get you on the path and get you a lot more financial know-how so you can have potentially thousands of dollars more, optimizing your income, and make your money go a lot further. So check the show notes or go to enrichednurse.com. That's enrichednurse.com to check out our courses. It's never too late to get smarter with your money. Yesterday's better, but today is really the next best time. You can also click that subscribe button in the show notes. Get enrolled in our courses today. You can even try some for free. Subscribe, we'll send you more information about that. But back to my income. Listen to these numbers and my tax rates. And is this anywhere close to where you're at? Most people try to increase their household income every year. Like I said, I've been decreasing mine for years or keeping it pretty steady. So our household income is often between about 100 and 120,000 gross. And we often keep our taxable income as low as we can tolerate. So check this out. I have paid negative federal taxes. So that means the federal government actually gives me back more money than I paid in taxes. In 2018, I had a negative 2.62% tax rate. That was when my second child was born. My taxable incomes for those years, and the reason it was so low is because my wife and I, we took a ton of time off with our kid. And then my wife also dropped per diem after that and didn't go back to working part-time. So our adjusted income was $53,000 for the whole year. And our taxable income was only $29,000. So that's why we were, negative 2.6% with two kids. we actually made quite a bit more than that, but the way things panned out and tax breaks, and that was a unique year for sure. So it's definitely the least amount I've ever paid in federal taxes. But 2019, similar thing, like negative 1.14%. And like I said, our gross household income was still over $100,000, but our adjusted gross income for tax purposes was only $64,000 and like $39,000. In 2020, we paid 2% in income tax. In 2021, we paid 3% in federal income taxes. In 2022, we got negative again, negative 0.84%. We got more back than what we paid. 2023, our tax rate was only 1.98%. And again, these are effective tax rates because it's an average of the different rates. In 2024, our income was actually quite a bit higher in 2024 for some different reasons, but 4.3%. Even though we made quite a bit more money and our adjusted gross income that year was $113,000 and our taxable, we still only paid 4.3% in federal income tax. I mean, that's how powerful understanding this stuff really is. So like I said, back in 2013, my tax rate was 15%, and that was on adjusted gross income of $144,000 and taxable income of $120,000. And then in 2014, started to get a lot smarter. I think that was the first year I maxed out a 401k contribution for my wife and I, and that lowered our adjusted gross income down to like $124,000 and $94,000 taxable, and dropped our tax rate to 12%, which, is definitely better. But then 2015, that's when I had my first kid, and also when I was like, okay, I am going buck wild with the tax shelters. That was the first year we got like a $5,000 tax refund and 3.5% federal income tax rate. So we went from like 15%, seeing a ton of our income going to taxes, and not having a ton and not feeling like we had a ton in take-home pay, to significantly reducing our taxable income, having similar take-home pay, and getting down into low single digits for our effective tax rate. I have a blog post that I'm going to have. Check the show notes for it, and you can see this on my website, because I know sometimes talking about these numbers is a little bit hard, but multiple years with negative tax rates, multiple years of 3%, and almost all of these years, I had a household income of six figures. Like I said, most years between 100 and 120,000 between my wife and I. So it's not like we're talking about small amounts of money or we got like 10 kids, which is why we're getting our taxes low. Okay. So myth number 4 about itemizing taxes. So, I guess there's potentially 2 myths, like you should itemize everything. And then also another myth is you don't need to itemize anymore because the standard deduction is way higher. So it's definitely true the standard deduction is way higher than it was when I was doing my taxes back in like 2013, 2014. Now, for 2026, I think the single is going to be $15,750. And for a married couple, it's like $31,500. So most of what was saving me money on my taxes back in, like 2014, changed quite a bit, because I never really have had a ton of write-offs per se by itemizing. So definitely benefited from the higher standard deduction. And I think that's probably true of a lot of nurses, but you can still itemize some things at the federal level. And so it's still worth itemizing quite a few things. I don't think you have to get too crazy with it, but also you should keep itemizing in mind, even though those standard deductions are higher, because on the state level, you might find that some things still count that are itemized in addition to the standard deduction. So keep that in mind. But there's some things that's just, where there's no way that you're going to get to like $31,500 if you're a married couple, especially if you don't have like a ton of mortgage interest or something like that, or expenses that account for itemization. The standard deduction, you're just not going to quite get up there. But keep in mind, there are some other things that you can still itemize and reduce your tax liability in addition to that standard deduction. Some things that come to mind, I haven't had student loans for a long time, but student loan interest, charitable contributions. And then also keep in mind some things can be deducted at the state level as well. So it might not help you on your federal taxes, but it can help you on your state taxes. So keep that in mind. And one thing that comes to mind there is like a tax credit for political donations, some other types of charitable donations. I notice charitable donations impact my state taxes even when it's not impacting my federal. As I'm doing that, I'll kind of play with things as well to see how it impacts the final number. And then also 529 contributions. So if you have kids saving into a college fund, that can lower your state taxes as well. Okay, and so that brings us to myth number 5. So I think it was Benjamin Franklin who said, nothing in life is certain but death and taxes. And I actually think, that is a bit of a myth because, like I said, I've gotten my tax rates just as a nurse, a very much middle-class income nurse. I've gotten mine federal taxes to negative, so less than 0%. So taxes don't have to be certain, and you can always defer taxes, which can save you money. So deferring taxes, protecting them, and tax shelters, there's all kinds of ways, all kinds of things nurses have access to that can protect their income from taxes. So Benjamin Franklin, I don't think they had all these kinds of tax shelters back then. Things were quite a bit different back then in how people were taxed. But I wouldn't assume that you have to pay a ton of money in taxes. There's definitely a lot of ways for you to avoid taxes and make smarter decisions with your money. So off the top of my head, here's some of the ways that I am protecting my income from taxes and how I'm lowering my taxable income. Insurance premiums for medical and dental, that lowers your taxable income. I use HSA plans, health savings account. I'm maxing that out. That's protecting my income from not just federal and state taxes, but also Social Security and Medicare payroll taxes. I'm using dependent care flexible spending accounts. I'm using limited purpose flexible spending accounts. I am using my 401k. I'm using my individual retirement account. I'm taking advantage of things like I-bonds, which grow, tax deferred and aren't subject to state taxes. I mean, that's just off the top of my head. And then also using business write-offs. There's a lot of ways that you can legally avoid taxes. And it's not like it's not even cheating. I mean, all those things I just described, those are created because the government wants you funding those kinds of things because it's a good thing when you have enough money to replace your income. It's a good thing to be able to retire. It's a good thing to have investments that are growing and stimulate the economy. It's a good thing to not have to be dependent on Medicaid or the government for potentially medical care and things like that. And it's a good thing to have people not financially stressed and burdened. And so that's why there's incentives to lower your taxes, but so many people don't utilize them. Myth number 5, death eventually is certain. I'm not trying to dispute that one, but taxes can be avoided and you can definitely reduce taxes and even get them negative like I've done. All right. So we broke down 5 myths about your taxes and return. You need to pay for professional help. Not necessarily. There's lots of easy ways to do your taxes, and you might be surprised at how incentivized you feel to lower your taxes and earn your tax return by doing it yourself. Myth number 2, getting a big return is the way to go. Not necessarily. You might be better off striving to get more money every paycheck throughout the year by adjusting your withholding. And you might even be motivated to save more money and get a big return by making smarter decisions with your money come tax time and taking advantage of shelters that you wouldn't otherwise have utilized because you already got a big return. So think about that. Myth number 3, you can get bumped up a bracket. And sure, if just because you get bumped up a bracket doesn't mean that all your income is going to be paid at that higher rate. And you can certainly decrease your taxable income, potentially qualify for other tax breaks that phase out depending on income level. And also you can reduce the amount of your income in higher brackets by reducing your taxable income with tax shelters. And you don't have to itemize anything anymore, or you should itemize everything. So it's true the standard deduction is much bigger, but even in addition to the standard deduction, there's plenty of things that I can still get tax breaks for by itemizing. And then there's quite a few things that there's just I don't need to do. It's kind of a waste of time, so I don't need to spend time inputting them in. Good idea to discover what those are. Usually software helps make that pretty obvious. And nothing in life is certain but death and taxes. So sure, death eventually, but taxes can definitely be avoided, and like I said, I've gotten my taxes down to even negative rates at the federal level. I would amend Benjamin Franklin's quote to "Nothing in life is certain but death and taxes," especially for people who don't do a very good job avoiding those two things. So there you have it. I hope you enjoyed today's show. If you would please leave us a review on Spotify or iTunes, I would appreciate it. It helps nurses discover the show. And also subscribe to our mailing list for our newsletter to get discounts on our ANCC courses and to get access to free course offerings. And if you are ready to get smart with your money, enroll in our accredited ANCC courses today or join our annual Nursing CE membership. Thank you so much for listening. And don't forget to file your taxes by April 15th and consider just doing them yourself this year. And I think you might be surprised it's not as hard as it seems. All right, cheers.